Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
Thanks for tuning in. February 18th. Positive day on the markets. S&P 500 up 0.75%, sitting at 6896, playing with that 7,000 all-time high area. The Dow Jones Industrial Average sitting at 49,809, up 275, up 0.5%, trying to get back to its all-time highs, just above 50,000. The NASDAQ up 257 points, up 1.14%. The Russell 2000 up 1.2%, up 32 points, 2678. So far, so good for this morning. Bitcoin, not so much, down 647, right around $67,094. Real quick on Bitcoin, they won over Wall Street. I saw that headline out there, and I was like, yeah, they did. ETFs, like BlackRock, started doing Bitcoin ETFs, where you can go long and short. And it brought a investor base into Bitcoin, which is sometimes more than happy to ring the cash register, whereas a lot of Bitcoin owners have been, I'm going to hold it forever. I'm going to hold it till it goes to 1 million. So the two types of investor classes have started to fight with one another. I don't know if I'll get into Bitcoin again for another trade. I pulled off a nice trade last year. Bitcoin surged to a record high on October 6th. Now it's stalling aggressively. There's no obvious catalyst to restart it, as the institutional investors have already come in. It's not playing like gold is playing, and it's not responding on a stock market day where someone would consider buying stocks at high prices, high valuations as a risk on, which would assume that you might go with Bitcoin as well, risk on kind of trade. Taking a look at some of the other stories on Wall Street today, and some things that I have to hit upon. 10-year Treasury sits at 4.07%. All the major commodities that I follow, crude oil, gold, silver, and copper, all higher. Brent crude's just under $70 a barrel, $69.72, up 3.4%. Yesterday, the Trump administration said if things went great with Iran, they seem to want to work with us and come back and meet our demands in the next couple of weeks. Today, it's, they're missing one of the key points that we are insisting on. It's tough to follow. Gold up 120 today, up above 5,000 again, up 2.4%, sitting at 5,025. Silver up $4.45, up 6% to $77.99. Let's call it $78. So those are the market numbers, roughly an hour plus into the open. The IRS is eliminating direct file. Wow. That was a pretty good service for the average American who doesn't have complicated taxes. Gas prices continue 12th straight week below $3 a gallon amidst a glut of crude. Apple is decoupling from the NASDAQ, avoiding the AI whack-a-mole. They didn't spend a lot on AI. They're licensing Google's Gemini's AI. More on Apple as the show unfolds. Apple's lack of correlation is 100% positive right now. We're in an environment of AI whack-a-mole where investors get nervous and they start fearing an AI-fueled doom loop, flip-flopping between fears that the hundreds of billions of dollars being spent on AI will not pay off, and worries that industries from software to wealth management to logistics will be rendered obsolete by the same technology. More on Apple in just a few minutes. It is an interesting day for Apple as new product is rumored to be coming not this quarter, but announced in the second quarter of the year for maybe back half of 2026 or early 2027. I guess the cat's kind of out of the bag there, isn't it? They're talking about an AI pendant and AI glasses, AI AirPods. The pendant is probably the shakiest of the ones mentioned in research reports that I've been picking up on. Again, I'm going to come back to that in just a few minutes, tell you why it's the shakiest. The major averages are supported today by their strength in large components. The Vanguard Mega Cap Growth ETF is up 1%. IT is up 1.6%, consumer discretionary up 1.6%. Amazon finally seeing some momentum after yesterday's higher finish, snapped a losing streak dating back to February 2. NVIDIA is up similarly today after announcing a multi-year partnership with Meta Platforms. More on that in just a moment. Mega cap gains certainly play a role in the index level gains today. Strength is not limited to just the market's largest components, though. You're seeing winners in energy up 1.4%, materials up 1.2%. Confidently rebounding from yesterday's weakness. Financial sectors up 0.8%. Today feels more like a normal day on Wall Street. Yesterday felt like a hangover day from 4th of July, or for those of you party heavy on President's Day, in honor of George Washington. We did see some housing starts out this morning. Total housing starts increased 6.2% month over month. That was for the month of December in a seasonally adjusted annual rate of 1.4 million units. Single family units starts were up 4.1%. Building permits increased 4.3%. This is bullish for the home builders in large part. When you get a permit, you don't really start building the home. It's a process that takes about 6 months. You have to order the goods. You have to get the labor involved. But the permit gets approved by the city government typically. And the action flows 6 months after it. Yesterday, there was a big story on Meta committing to buying millions of NVIDIA chips for its AI data center. Everyone wants to be in love with NVIDIA and use their chips again. So companies like Broadcom, and I guess to a lesser extent, Cadence Design Systems, Google, and Amazon, everyone wants to make specialized chips for AI and try to do stuff that's cheaper than what NVIDIA is doing. That's why everyone's coming for them, so to speak. But NVIDIA expands the Meta relationship driven by large-scale Grace CPU deployment and Spectrum X adoption. Stifel, the analyst Ruben Roy, said NVIDIA announced a multi-year, multi-generational partnership with Meta to build on-premises cloud and AI infrastructure, an expansion of previous partnerships, which is expected to entail large-scale deployment of NVIDIA CPUs, GPUs, and Spectrum X Ethernet networking. Importantly, Meta is going to adapt networks, the rack-scale networks that NVIDIA has, confidential computing, which was discussed at the company's CES keynote as a foundational feature of the upcoming Vera Rubin platform. Key high-level takeaways include this collaboration is the latest, which represents the first large-scale Grace CPU-only deployment, which NVIDIA and Meta expect to support with infrastructure co-design and software optimization. Another takeaway is that it's the further validation of NVIDIA's Spectrum X Ethernet networking platform, which is not new product, but newish to you and me, the investor out there, and not necessarily the technical expert who understands all things tech. So another revelation from this partnership is the adoption across other emerging use cases. This expanded collaboration reinforces the longer-term initiative. Expect hyperscalers to continue to invest in internal silicon projects relating to network initiatives with vendors such as Celestica, ticker symbol CLS. They're rated a buy according to Stifel. And Arista Networks, they're not covered, ticker symbol ANET. They continue to expect NVIDIA to compete effectively with full stack architecture approaches. Palo Alto Networks delivered a quarterly beat, but shares fell more than 6%. Company lowered its full year earnings guidance. CEO Nikish Akora said the earnings per share cut is due to the CyberArk and Chronosphere deals increasing its share count. Analysts have this to say about Palo Alto Networks. Results were driven by strength across SASE software firewalls and Prism Airs, while platformization stayed a tailwind with a quarterly record, not a record, of 110 new additions. Requests to work together for Palo Alto Networks increased by 23% year over year to 16 billion. They've got a nice pipeline is what we're getting at here. The quarterly results show that Palo Alto Networks had strong last 90 days, robust growth across Multiple product lines, continued platformization momentum, and further acceleration into newer AI offerings like Prisma. Quarter 2 included only a marginal contribution from acquisition organics. What's weighing on the stock is its guidance, even as quarter 3 and 2026 revenue are stepping up meaningfully with the CyberArk and Chronosphere now included. The downside earnings per share outlook is a typical sign of margin pressure, reflecting integration-related cost and a higher cost backdrop. Those costs are viewed as manageable over time. They add to the current AI-heavy sentiment, where disruption fears are already weighing on shares of the market is now more sensitive to any sign of margin compression. The strong results are being outweighed by the lower earnings per share outlook. Palo Alto Networks reaffirmed its long-term targets and downplayed disruption concerns. Investors are watching closely for improving visibility on integration execution, cost pressures, and how quickly earnings per share can reaccelerate as the combined platform scales. I like the idea of having a security play in your portfolio if you're an individual stock buyer, whether it be Palo Alto Networks or CrowdStrike. Take a look at the 52-week highs. Consider what works best for you as far as how much it has pulled back, because it could pull back that much again. It's not a mystery when companies pull back 20%. They probably have a history of pulling back 20%. It's not a mystery when a company pulls back 40%. They probably have a history of pulling back 40%. Workday was downgraded to hold from buy at Citizens after co-founder Anil Brushi returned as CEO. The previous CEO made a lot of acquisitions, but couldn't stay ahead of what was perceived to be AI's massive threat to the software as a service category. I do not own any Workday. I do not want to own any company that has a civil war going on with what they're trying to do with AI versus what AI can do to displace them. I'd rather buy the picks and shovels. I'd rather buy the hyperscalers at this point in time when they fall from their 52-week highs. I'm not saying no to everything, of course. Interesting stock pick out there. Elliott Management has amassed a more than 10% stake in Norwegian Cruise Lines, arguing that improved profitability can help reverse a long stretch of stock underperformance. Elliott believes that they can get the shares up to $58 a share. I think it's 56 or 58. Don't quote me on which one it was. But that would be about 150% higher from yesterday's price. It's a pretty good return. And a 10% position is a pretty hefty position. Norwegian Cruise Lines, for the record, has had a very large underperformance in the last 5 years coming out of COVID, even though their competitors have rocked and rolled coming out of COVID. It's because the product at Norwegian's just not the best. If you do any shopping amongst the big three, including Carnival, you might say to yourself, well, Norwegian doesn't have the ports that we like, or their boats aren't as big as the other ones. Me personally, if I were to ever to do a cruise and you'd have to put a gun to my head, for those of you who've known anyone who's done gun damage to their own body, I'm sorry. But I'm trying to say, like, I don't want to do a cruise. If I did, I want to do a small one. I want to be with my honey. I want to have nice meals. Don't want to see a lot of kids. Don't want to see a lot of drunk Americans. So Viking cruises to me is the most attractive. And again, I don't want to go on a cruise. Cadence Design Systems was up 7% on better than expected results. The maker of specialized software, it's used to design semiconductors. It's been drifting lower. These numbers are also good for NVIDIA, which is a Cadence partner. Cadence makes software that says, you and I say, let's come up with a pendant, and you're going to wear it, and it's going to record everything that goes on in your house, and we're going to call it Household Pendant AI. And as you walk around, it's going to, do some sensors on the air quality. It's going to do some sensors on the heat, the levels. It's going to hear your conversations about what do we need for dinner tonight. And it's going to be, we would design that software before we built the semiconductor. We had designed the semiconductor with software from Cadence Design Systems. It's a pretty good product. Now, they do have exposure into and or not into China with the whole she loves me not Trump administration, sometimes saying Cadence isn't allowed to sell there, sometimes saying they are allowed to sell there. StubHub, oh boy, this one's been a disaster. I think we've all used StubHub, and on some levels we all hate StubHub. And if you missed the pre-ticket sale, you probably hate StubHub. I got a Capital One card just because I saw so many dang commercials about going to concerts. So those advertisements work. So I got the pre-sale Capital One card so I can get tickets to the concerts that I want to go to on a Wednesday before they're released to the public on a Friday. Typically, the artist has their own pre-sales on Thursday. So I've seen a lot of great shows in the last 2 years in close to the front row because I had that pre-sale credit card. It's ridiculous. It's also ridiculous that I have the Chase Sapphire card that's $700 a year. Now, you do get some pretty good perks with it, and I actually spent $75,000 on travel and hotel and flights last year. Family did a lot of traveling, especially at the end of the year. And once I spent that $75,000, I unlocked a magic tier where I got even more benefits. So $700 in fees, I easily hit about $1,600 in perks, but were they perks that I absolutely needed? Probably not. So it begs the question of why did I do it? Berkshire Hathaway said in a regulatory filing released yesterday that it's whittled down its Apple stake in the fourth quarter. Notably, that was the last quarter with famed value investor Warren Buffett at Berkshire's helm. That explains the weakness. This was a gigantic position. They were the fifth largest institutional shareholder in Apple. The Omaha-based conglomerate said it created a stake in the New York Times. Ouch. I don't know about that. Right there. It's going to bring the question of, do you want to own Berkshire stock anymore? When they once were picking up positions in Alphabet and Apple, you kind of saw those as the Coca-Colas of the 21st century. The New York Times, I feel, just instinctually, that it should be left in the 20th century. But when you see the Washington Post cut staff, you got to think that the New York Times is losing subscribers as well. Because but my children get their news from TikTok. My children get their news from Instagram. They do not get their news from CBS and Walter Cronkite or CNN and Anderson Cooper. They probably couldn't even name those people. For all intents and purposes, I'm not sure. Again, I don't know what they're trying to do with the New York Times. They could be trying to get in there and get the company to shake things up. Leon Cooperman, another billionaire, similar to Warren Buffett and Berkshire Hathaway. Leon Cooperman's Omega Group, they built a large position in rocket companies. I would guess they're building on a rebound in mortgages and demand for homes. Bill Ackman's Pershing Square and Baupost Group's Seth Klarman also said they bought shares of Amazon. Let's talk about that Apple pendant. According to Bloomberg, it's going to be working on an AI pendant that you can pin to your shirt or wear as a necklace. For all intents and purposes, it sounds a lot like a pen formerly made by Humane, which had a GoFundMe that was a disaster. It reportedly has a camera for computer vision, a microphone so it can be operated by Siri, and potentially a speaker so that you could have a back and forth rapport with Siri as well. There's one thing that's different, though, between the two, with the Humane pen and what Apple's working on, according to Bloomberg's Mark Gurman. And that's the fact that Apple's AI pendant likely won't do much of anything on its own. Apple's pinnable AI gadget will allegedly rely heavily on iPhone for processing and will include a chip that is closer in computing power to AirPods than an Apple Watch. Thus, no heavy lifting from the pendant. Now, again, the pendant still could be canceled. Considering most people don't have any expectations for an AI pen to begin with, that's okay that they're getting pretty bad comparisons to Humane's AI pen and scaling it back. Maybe it's best. Humane's AI pen, as a quick recap, didn't really do a lot of what the company promised. It was buggy. It was prone to overheating. It cost a ton of money. It was $699. And then you had to pay a $24 or $25 subscription every month to get a cellular service for it. Now, everyone's trying to kill the smartphone, whether it's OpenAI. They're working on something that's said to be a pendant to come out at the end of 2026. Meta's got the glasses, hundreds of watches and rings out. Not hundreds. There's 5+ watches and rings out there. I want more technology. Every morning I check my sleep score and I see how I did the night before. And here's what stinks. And if any of you know how to help me, let me know. I wake up a lot in the night. My sleep score last night was 74. I did well on the REM, on the core, on the deep sleep. I got 6+ hours, almost 7 hours of sleep, which is great for me. But my awake time was a rude 1 hour and 31 minutes, with a big chunk of it coming at around 4 a.m. to 4:45 a.m. But I look at it every day, and I went to Gemini and I asked, how come my sleep score never gets above 75? And it said, how old are you? And I said, 50s. And he goes, well, once you turn 50, your sleep starts to get disrupted in the middle of the night a lot more. Make sure you don't do caffeine. Make sure you cut alcohol. Make sure you cut water before you go to bed. A lot of things that your body will wake up to, but I can't get it above 75. And oddly enough, artificial intelligence told me, you're probably not ever going to get it above 75 because you're old, damn it. It didn't say that part, but close. So the AI pendant, will it kill the smartphone? I don't think so. Will it be a hit? I don't know what it's going to do. At this point in time, I'm not betting on it. Apple's version, it won't be burdened by the issues that the Humane AI pen had. It's going to offload the computing to your iPhone so it can rely on wireless connectivity for internet. Apple, will they be able to convince us? I'd like Apple to come out. Like I said, I got the watch particularly because it can monitor your blood pressure. Monitor it, not give you the readings. Tells you if you're starting to have a increase in blood pressure. The AirPods can now do your internal temperature, telling you maybe you're getting a fever and you're having low blood oxygen levels, according to the Apple Watch. That information is valuable to me. I don't want to be the guy who dies of a heart attack and didn't see it coming. If Apple or any other tech company can help me see it coming, I'm all in. Gurman also dropped more intel on Apple's upcoming smart glasses. According to the report, Apple will have another archetype in mind for its first pair of smart specs, and this time the role model is Meta. So they're just copying, they're imitating others, a lot what Microsoft did with their operating system in the 1990s. Apple's alleged smart glasses will have 2 cameras, one for the computer vision and another one for pictures and videos. They'll reportedly have speakers and microphones, allowing wearers to make calls, play music, snap pictures and videos by using only Siri. On top of that, they'll also apparently be able to use AI to do stuff like interpret text or provide turn-by-turn directions. That sounds just like the Meta AI glasses. Now, Meta's AI glasses, they're selling really well, but on very low levels. So Meta's AI smart glasses can be useful. I've heard really good things about them. I've not used them myself. The process of interfacing with your phone still feels disjointed at times. To no fault of Meta's, something tells me Apple made a pair won't share that problem. So Meta's glasses are good, but they don't really have a home to work off of as well as Apple does. And Google's come out with their glasses by the end of the year as well. So I think Apple stock will be higher by the end of the year over the $300 level, in large part on getting us excited about some of the products coming out. I have an event coming up, Beyond the Noise, Navigating Wealth in Uncertain Times. RSVP today to get you reserved your spot for the Lafayette Library in Lafayette, California, East Bay. It's my only evening event in the East Bay for 2026. And one of my 2 events with CFPStephanie Richman and Nathan Rogers. They work with EP. They're going to be giving a big presentation on, are you ready for retirement? What are you doing right? What are you doing wrong? What are you missing? What products out there should you be adding? If you just own stocks in your 401k, stocks, bonds, and a little bit of real estate like the home you live in, you're not ready for retirement. Find out more about the event at robblackshow.com. It's robblackshow.com. I got a couple more segments coming up. Stay tuned.
Retirement planning is more complicated than ever, and it can be hard to even know where to begin. So set aside March 11th, Wednesday evening, 6:30 p.m., and get ready to learn some strategies from Stephanie Richman, Rob Black, and Nathan Rogers that can help you retire better and pass on your estate while navigating wealth in uncertain times. That's March 11th at the Lafayette Library in Lafayette. The event runs from 6:30 to 8:30 and will focus on retirement income, tax strategies, estate estate planning, and tax planning. If you're nearing or you're now in retirement and have at least $500,000 in investable assets, this seminar is for you. Stephanie will explain how to transition your portfolio from the accumulation phase to the income phase, which accounts to draw from first, how to protect your estate from long-term care costs, and much more. Learn how to invest during inflation and interest rate moves. Also, Social Security strategies and managing IRAs and 401ks in retirement. Rob Black will share market happenings and trends. Navigating wealth in uncertain times is appropriate for individuals with at least $500,000 and either in or heading to retirement. Wednesday, March 11th, 6:30 to 8:30 at the Lafayette Library in Lafayette. Sign up for the event at robblackshow.com.
Don't want to work forever? Check out the Retirement Planning Guide on robblack.com. That's robblack.com, powered by EP Wealth.
Taking a look at the markets now that they've been open for a few hours, the S&P 500 is building on its day, as is the Dow and the NASDAQ. The S&P 500 is up 90 basis points, almost 1%, above 6,900. The Dow Jones Industrial Average up 301, back to 49,834, closing in on 50,000. Historically, having been in this market for 30 years, big round numbers mean that you have to put in some work. I find that ridiculous because it's just a big round number and very few people own big round numbers. They own the stocks inside the indices that don't necessarily hit those big round numbers. But technically speaking, it's more right than wrong to say that when you get to SP 7,000, Dow 50,000, NASDAQ 20,000, NASDAQ 25,000, Russell 3,000, you're going to have a bit of a, oh, that's a big number. Let's have a party. Let's pop the champagne. I used to pop champagne early in my career on milestones that my business was hitting. It's ridiculous to look back on. It is interesting to look back, though, isn't it? I tell my kids stories about my adventures in college, and they look at me like a freakish god of sorts because I had a lot of fun, I had a lot of entertainment, I had a lot of travel. Started a business right shortly thereafter. I did things like go to Europe for 3 months, essentially with a friend, but he bailed after 3 or 4 days. Did the same thing with Australia during my summer vacations from college. I traveled. I saw the world, and I'm glad that I did it. But I also got myself into some crazy situations. Anyhow, some of them I look back on, I can't even believe I did, if that makes sense. I don't know if that's my memory going or just how much I work these days and don't necessarily enjoy my day-to-day. Snap's direct revenue hits $1 billion annualized run rate as subscribers top 25 million. Someone's going to acquire Snap at some point in time. I don't want to play with it, but I get the idea. I think their CEO probably needs to step down. He's the original founder, Evan Spiegel. He's stuck in the we have to be a camera company a little bit more than social media company. I like a lot of what Snap does, but I'll be damned if I'm going to pick up shares based on the inconsistency of the product they've put out there in the last few years. Last month, Snap unveiled Specs, an independent subsidiary for its augmented reality smart glasses, in a bid to challenge Meta in the fast-growing wearables market. Now, I guess this begs the question of Snap. When I just said at some point in time they're going to have to be acquired, I don't think they're there yet because it has a market cap of about $8.2 billion. It's almost going to take another failure of not competing with Apple, Alphabet, or Meta with glasses because they just don't have the size and scope of the research budget. R&D. They've got a great CEO for vision, but not necessarily for finished product. $8 billion is too much. That would have to go for like a $12 billion acquisition. And Beats was more than half of that. 75% of that. I don't see it. So let's move forward. Take-Two, wholly owned publisher Zynga. That means they are part of Take-Two. Take-Two's got Grand Theft Auto 6 coming out probably this November. It's been delayed. It's been delayed. It's been delayed for years and quarters and months and weeks and days. But it's probably coming out in November of this year. It looks pretty good if you go to YouTube and take a look at Grand Theft Auto 6. It'll be a pretty big game. It'll be the biggest video game of all time. It'll be the biggest entertainment product of all time. That's a lot to say. Now, it's been in development such a long time that it's going to have to be all those things to earn the money back for Take-Two, which has pumped in the money to develop it. So Zynga is doing a cross-title collaboration. This is interesting, with CBS to celebrate the landmark's 50th season of the Emmy-winning reality competition Survivor show. It's going to bring the show's groundbreaking gameplay to 5 titles in the Zynga portfolio. And it's going to allow Zynga players to make the decisions, or some decisions, for Survivor and the contestants on the show. I don't know how it's going to work, but I bring that up now because people might be talking about it in the near future of how people at home are controlling contestants, like the Running Man movies. Where do you cross the line of technology, gaming, and actual human beings on the other side of those games? I don't know how it's going to work. Learned a new word today that you're going to probably get sick of. Boom session. Consumer spending is strong, debt's at an all-time high, economic output is surging, a lot of people feel terribly financially. Thus the new word boom session. Obviously it's a tie-up of the words boom and recession. A portmanteau of the words. The term encapsulates the feeling amongst many Americans that the economic engine that we help feed every single day with our debt, with our businesses, with our credit cards, with our cash flow, with our earnings, with our paycheck, that we're not really pushing ourselves forward. We're just pushing the economy forward. It explains the big disconnect between the solid GDP data and the sour consumer sentiment. The boom session. What's in the name? Thematically similar to the word vibe session that was popularized in 2022. It explained the disconnect between solid economic data and negative consumer sentiment readings exiting the pandemic. It also drew comparisons to the K-shaped economy. The top leg of the K is going up at a 45-degree angle. The bottom K is going down at a similar angle. The bottom leg of the K represents the middle class and the lower incomes of the United States. The upper leg going up represents the higher incomes. So we're hearing a lot of these terms. The economy's doing well. Ordinary people think that they're not doing well. The boom session framework aims to bring awareness beyond the opinion to be the material financial hardships faced by those not in America's uppermost echelons. Once that's contextualized, Americans will easier understand why many Americans believe the national economic engine that they help power not propelling them forward. Inflation is not created equally. I believe that all men are created equally, regardless of skin color, where you come from in the world, your intelligence. I think we're all just humans. But inflation's not equal. It's not created equally. It's not a one size that fits all. Consumers are facing different rates of price growth based on factors like their income class, geographical location. Grocery and shelter inflation rose the most of any essential tracked by Morgan Stanley between 2020 and 2025. Those two categories made up a disproportionately high share of lower income consumers spending in 2024. Lower earners historically see higher rates of inflation than their better off counterparts. The inflationary gap widens when overall price growth is above the Federal Reserve's target of 2%. So the Trump administration wanting to run the economy hot is probably going to end up hurting the middle class and the lower class due to inflation on food prices and shelter. Most grocers that are in underserved communities can increase competition and drive down prices, in turn helping lessen the inflation disparity. We'll see where, do the rich get richer? Or do we start figuring out ways to help the middle class and lower income classes? President Donald Trump has pushed initiatives aimed at lowering prices for homes and pharmaceuticals this year. Some are sticking, some are not. But you can hear the word boom session, I think, a little bit more. Nearly 3/5 of Americans believe the U.S. economy is currently in a recession, which is widely defined as a period of multiple quarters with negative GDP growth. We are not, according to the government statistics, and a lot of people don't believe in government statistics anymore. Trump fired former Bureau of Labor Statistics Commissioner Erica McIntyre in August, implying that the agency was manipulating labor market data under her leadership. Anthropic released Claude Sonnet 4.6. Didn't they just come out with the new one last month? It's continuing the breakneck pace of AI model releases. It's the second major artificial intelligence model in less than 2 weeks. The startup said Claude Sonnet 4.6 is better at using computers, coding, design, completing knowledge work tasks, and processing large amounts of data. In their release, they showed how you can renew your driver's license. It can do it all for you. Okay. Not sure how much I'm going to pay for that service, but when you start factoring it into that's just one thing that I have on my list of things to do in the next year, sure, I get it. Anthropic is in the throes of fierce competition with rivals OpenAI and Google's Gemini. The launch of Claude Sonnet 4.6 serves as the latest example of the breakneck pace. Anthropic launched another model just 12 days ago. Anthropic's recent advancements have also accelerated a massive sell-off in software stocks in recent months. As we saw how good Sonnet really is, it is the best enterprise AI solution. Meta is probably the best for advertising at this point in time. Gemini's encompassing of their big ecosystem of Gmail and their other apps. So they're good with the consumer and business. But where does that leave OpenAI? Look for Anthropic and OpenAI, as well as SpaceX, to come public in the middle to latter parts of the year 2026. And I think that could be a problem. You're talking about billions and billions and billions of dollars being raised to create market caps probably close to $750 billion to $1.5 trillion. Some of that is going to be shaved off of cash on the sideline. Some of it's going to be shaved with venture capital. Some of it's going to be shaved and implemented with stocks that you already own. You may say, you know what? I own this loser of a company. Ticker symbol XXXXX. I don't know. I just want to make one up so I don't slam the company. And I'm going to put that funds into these hot, new, sexy IPOs. People have a thing for hot, new, sexy IPOs, but this is a different IPO market than it was in the 1990s and 2000s. This IPO market, these are established companies that have been private for 10 to 20 years. Money's already been made. Valuation's already been created. Not since your apartment's post-Halloween party have laundry machines been so excitable. Tide, with Procter & Gamble being the company, is releasing new product. Now, haven't we been washing clothes for probably hundreds and hundreds of years? But they've come up with a waterless detergent Square. The industry for laundry detergent is $25 billion. This is going to create no plastic or liquid, so it's going to cut the weight, which factors into shipping costs. And it's going to cut the plastic, which factors into landfill and what people want to use today. What they've created is a tile that has 6 different layers of woven fibers made from cleaning materials. The fibers dissolve in cold water to cut down on energy usage and come in a recyclable box that is much smaller and cheaper to ship than the other detergent products. Now, again, you're going to say, don't they already have the pods? Well, the pods have those little microplastics in them that once you get them into the water system, they're out there. And we're consuming more and more plastics, and they're staying in our bodies for longer periods of time. A box of 42 tiles has no plastic. It costs $19.99 on Amazon. What's that? 50 cents a wash? That's compared with a $13 pack for 42 pods. Still, the new product, which took about a decade to develop, according to Procter & Gamble, could open up a whole new avenue of revenue for the big business of laundry. I do my laundry on a regular basis, except for when I'm trying to make my spouse mad at me. I'm kidding about that. Do not pass that on. Tide introduced pods in 2012, a product that is significantly more expensive than a liquid or powder alternative. And it has since become a $2 billion annual business for the company. Got a big event coming up in the East Bay I'm excited by. got plenty of seats now, but it's one of my only 2 events in the East Bay this year. Lafayette Library. I love that location. It's got great parking and a really nice room. Big. It fits about 100 people. We've got space for about 60 total. Beyond the Noise, Navigating Wealth in Uncertain Times, RSVP today, 6:30 to 8:30, March 11th. Sign up at robblackshow.com. That's robblackshow.com. Take a break. We'll be right back.
Retirement planning is more complicated than ever, and it can be hard to even know where to begin. So set aside March 11th, Wednesday evening, 6:30 p.m., and get ready to learn some strategies from Stephanie Richman, Rob Black, and Nathan Rogers that can help you retire better and pass on your estate while navigating wealth in uncertain times. That's March 11th at the Lafayette Library in Lafayette. The event runs from 6:30 to 8:30 and will focus on retirement income, tax strategies, estate planning, and tax planning. If you're nearing or you're now in retirement and have at least $500,000 in investable assets, this seminar is for you. Stephanie will explain how to transition your portfolio from the accumulation phase to the income phase, which accounts to draw from first, how to protect your estate from long-term care costs, and much more. Learn how to invest during inflation and interest rate moves. Also, Social Security strategies and managing IRAs and 401ks in retirement. Rob Black will share market happenings and trends. Navigating wealth in uncertain times is appropriate for individuals with at least $500,000 and either in or heading to retirement. Wednesday, March 11th, 6:30 to 8:30 at the Lafayette Library in Lafayette. Sign up for the event at robblackshow.com.
For more information about EP Wealth, visit robblack.com. That's robblack.com.
Logan Paul. Now, I'm going to be honest with you. I kind of hate the dude. I don't know why I hate the dude. I think it's because I'm twice his age or something. He's younger.
That's terrible.
He's engaged to a beautiful Nordic speed skater. He just seems obnoxious to me. He's about to get a little bit more obnoxious. On Sunday, Logan Paul sold his Pikachu Illustrator Pokemon card for a record $16.5 million to AJ Scaramucci. Now, you know that name, Scaramucci. He used to be the White House Communications Director, Anthony Scaramucci. The sale price is more than triple what Paul paid to acquire the card 5 years ago, nearly $5.3 million. So it's gone in value from $5.3 million to $16.5 million, outpacing baseball cards and even outpacing names like Meta. The sale has drawn controversy in the crypto industry as Paul had announced in 2022 that the card would be tokenized and listed on his digital collectibles platform, Liquid Marketplace. Since then, the platform has since been accused of multi-layered fraud in the crypto asset sector. Ouch. He had originally offered to sell up to 51% of the Illustrator on Liquid Marketplace, but ultimately only 5.4% of the card was sold for about $270,000 in the summer of 2022 to fractional owners. This is beyond confusing to me. Fractional Pikachu cards. Wait. Did someone really pay $16 million for something I could put a lighter under and scorch it? Bitcoin today struggled to reach 70,000. In the recent days, it struggled with that 70,000 mark. What do we do with that? I don't own any Bitcoin at this time. I personally am more of a trader of digital currencies than I am an investor. I'm looking for a bottom or a sign of a bottom. Kathy Wood's ARK fund takes a fresh hit amidst 50% plunge since COVID. She was in the right place at the right time with COVID, talking about everything's going to go online. And then, well, we came out of COVID and everything came back offline. But taking a look at Bitcoin today, it sat down $1,000 to 67,521. That's struggling. 10-year Treasury moves closer to 4%. That should be good for risk on assets like Bitcoin and like the stock market. So that's just my opinion. I like combining the bigger picture with kind of bullet shot research. Bank of America gave a 2026 outlook. They released it this week. It was from Naomi Buchanan, who's an analyst. She gave the top 10 themes for you. If you're feeling shaky, here are the top 10 themes for 2026. 10 themes for the next 10 months, if you will. The M&A supercycle. After years of stagnant deal making, Bank of America predicts a massive revival in 2026. This is fueled by stabilizing interest rates and pent-up demand for consolidation. The investment banks that collect the fees and the private equity firms look to exit holdings, names like Goldman Sachs, ticker symbol GS, Morgan Stanley, MS, Blackstone, ticker symbol BX, and KKR, ticker symbol KKR. The next big theme that they're looking at is the AI build-out, the mid-cycle scrutiny. Notice their words, not mine. We are no longer in the hype phase. We are now in the prove-it phase. Bank of America noted that while hyperscalers like Google and Meta are under scrutiny for their spending, the demand for physical hardware remains mission critical. Look beyond the software, look into the chips and the equipment need to be required to create these AI factories. So Bank of America is saying NVIDIA, Broadcom, ticker symbol AVGO, Marvel, MRVL, and Lam Research, LRCX. Maybe look for these names on a dip. Number 3 theme is the industrial reshoring boom. Companies that provide the heavy lifting for new factories and chip fabs. Ticker symbols Caterpillar, CAT. Eaton, ticker symbol ETN. Parker Hannifin, PH. GE Vernova, GEV. Bank of America highlighted that the companies move supply chains back to the United States, which is called reshoring. Industrial stocks are poised to outperform. Number 4 on the top 10 themes for the next 10 months is the global defense upcycle. Geopolitical tensions are rising. NATO budgets are creating a security supercycle. The names to look at for large defense plays with massive backlogs include RTX Corporation, ticker symbol RTX, Lockheed Martin, LMT, L3 Harris, LHX, and Northrop Grumman, NOC. Do you feel comfortable investing in a company that makes weapons of mass destruction? It's a good question. Next up, the oral GLP revolution. This is number 5 on the top 10 themes for 2026. The revolution, the weight loss story is evolving. 1 in 8 Americans now are on GLP-1s. The pharmaceutical giants leading the pill race, Novo Nordisk, NVO, and Eli Lilly. The OBA tax stimulus is number 6 theme. President Trump's One Big Beautiful Bill, also known as OBA, is expected to land at an average $1,000 extra in households for our pockets this year during tax season. This will be a shot in the arm for retailers like Costco, ticker symbol COST, Dollar General, ticker symbol DG, and Walmart, because they're all budget friendly. Number 7 theme is energy affordability and the grid. Clean energy and grid infrastructure. Ticker symbols are Generac, GNRC, Shoals Technology, SHLS, and Clearway Energy, CWEN. Real estate supply starting to tighten. Look for residential industrial REITs like Equity Residential, ticker symbol EQR and PLD. The number 9 theme for 10 themes in 2026, with 10 months left to go, is the rise of prediction markets. With platforms like Polymarket and Kalshi going mainstream, even advertising at the Style Awards this year, traditional betting companies are facing disruption. So the play here is Robinhood, ticker symbol RBNH, and DraftKings, ticker symbol DKNG. Maybe Robinhood as well. I just said that. Publicly traded companies that have early mover advantages in the event betting. And the final one is the luxury K-shaped rebound. So we know that there's a K-shaped economy with the leg of the K going up stands for luxury, high-end income, people like myself. The lower part of the K is the middle class and the lower incomes in the United States. So the high-end staples and beauty play would be Estee Lauder, ticker symbol EL, and L'Oreal, LRLC. These are just some names to start thinking about what's happening out there as the top 10 trends for 2026. I have a big event coming up in Lafayette. It is next month. Time is ticking. Sign up today at robblackshow.com. That's robblackshow.com. March 11th, 6:30 to 8:30. I'll get there around 5. I'll answer all questions. I'll bring a couple CFPs with me. We'll do a nice presentation. Are you ready for retirement? What are you doing right? What are you doing wrong? What questions do you have? Sign up at robblackshow.com.